In this video, I wanted to talk about what are the current mortgage interest rates and how it's affecting the housing market. And do we have a recession coming? And what should you do? How do you survive in these crazy times we live in? Later in the video, make sure you watch all the way to the end as I'll share a strategy, a different perspective. We'll look at everything from a different angle to help you survive in these crazy times. So if you're in the market to buy a house in this market, keep on watching till the end. You should have some great helpful information. First, let's talk about the interest rates and the mortgage interest rates. What's going on? So the Fed has decided that they are reducing the balance sheet, and that means that they will be buying less mortgage-backed securities. That's the big key for us on the mortgage side, and what has been affecting the mortgage rates for quite some time. The rates have gone up quite a bit, and we're expected to see another 6 to 7 hikes later this year on the mortgage side. Not only that, I had several buyers putting in offers this weekend, a multiple offer situation. One house had 10 offers, another house had 27 offers, and even up to 32. That's really happening right now, guys. So the market is still very intense. It's a hot market because we don't have listings. You don't have many properties on the house. For example, homeowners that are potentially thinking about selling and buying, they don't want to list their house because they're afraid of where they will go. I mean, why would I sell my house if I don't have a place to buy? That's their thought process behind it. And with everything happening right now, they're on hold. So because we still have more buyers than we have sellers, more people looking to buy a house than there are available houses to buy, they're going way above list price. Okay, we're seeing 5, 10, 15%, and even higher sometimes. If you have somebody moving from a different state and they sold a house at much higher values over there and they move to Texas, for example, from California to Texas, they can easily buy a house for 400, 500 in cash and go over 50, 60, even more $1,000 above list price. So it's still happening. So hang tight, okay? Because right now it's not really a matter of what the rates are doing. It's more about getting the actual house, getting the offer accepted. I'm sure you've heard about a recession in 2022. We're long overdue. And I want to show you something. I want to show you a chart over here. Okay, so if we look at this chart over here, this is a chart that's the unemployment rate, and it goes all the way back to 1950. If we look at the chart and you look at the gray columns going from top to bottom, that's a recession. Okay, so as you can see, everything is cyclical. And basically, if we look at the numbers over here, if we look at this unemployment chart, which starts at the lowest, not the highest, but the lowest point, that's when the recession actually kicks in. So starting from the bottom left, it's 1950. So this is historical data. Okay, as you can see, it's cyclical. But then if you go all the way to the right, on the bottom right, in 2020, these show that we should have had a recession in 2020. We didn't. We had COVID, so that kind of messed everything up. But we are due for a recession. Okay, and we're kind of at the same levels right now. So a lot of experts and professionals are saying that we should have a recession later this year, end of 2022 and beginning of 2023. So if we look at a recession, a couple things we need to address is that there's a misconception that last time when we had the recession, it was tied to a housing bubble. And most people think that every time when there's a recession, the housing market crashes, prices fall. That's not the case. There's two things that happen during a recession. First, the rates usually come down. Okay, so that's a good thing. And the housing market usually does pretty well during a recession. So if a recession comes later this year, beginning of next year, it's not going to affect the housing market. So if you're looking to buy a house now, this is still a great time to buy if you can get the offer accepted. So if you're in the market to buy the house right now and you're watching the news and you see the mortgage interest rates go up and you're freaking out, and you're maybe thinking about not buying, think about it this way. Let's look at this from a different angle, from a different perspective. I'm sure you know somebody, if you talk to some people that own the house, so somebody who's owned the house for the last 10 years, I'm pretty sure that they refinanced their current mortgage at least 2-3 times. And that's what's happening, right? That's what we need to remember, is that all of this is cyclical, okay? And the mortgage rates go up, the mortgage rates come down. So if you buy a house right now, and you're going to get a higher interest rate, that doesn't mean that that's the rate you're going to keep for 30 years. And in reality, nobody really stays in the same house for 30 years at the same interest rates. People refinance. Once you're a homeowner, once it's your house, you can use the equity as the home appreciates in value to refinance and roll in all your closing costs. So a strategy that I wanted to share with you is that if you can get the offer accepted now, I wouldn't be, yes, the rates are higher, it's going to cost you a little bit more, but at the end of the day, if we have a recession coming in the next year, let's say a year or two, and the rates drop again, you can easily refinance. Okay, so don't get discouraged with the interest rates. It's something I wouldn't want you to lose too much sleep on. I would focus on getting the right house, getting a good deal, and then once you're the owner, you can always refinance. Talk to anybody that you know. If they lived in the house for 10 years or more, they're refinanced. Okay, nobody really stays in the same house for 30 years with the same rate and same loan product that they used to purchase the house. So that's the good news. So yes, the rates are going up. Yes, the market is tough. I think that the rates are going to come down in the future. Later this year, when early next year, when we have a recession, the rates are going to come back down again. But I don't think that the prices are going to come back down that much. It's not going to drop. So if you're waiting for the market for the prices to drop, that probably won't happen. It's gonna, it won't be increasing as much as we see it right now. And this year we're expecting 8-10% appreciation. It's probably going to slow down. And historically, over the last 40 years, the average is 4 or 5%. Okay, 4.8% appreciation of home value. So you still have to live somewhere. It's always a good time to buy a house. I'm a big real estate guy, obviously, and just wanted to share this information with you. If you find this helpful, make sure you smash that like button. Make sure you hit the subscribe and hit the notification button so you don't miss any future videos like this. I'll be making additional videos about updating you on the market, on the real estate, on mortgages, the changes, everything you need to know about buying a house. I'll be making videos on this channel. So make sure you hit the subscribe, hit the notification button. Thank you so much for watching, and I'll see you in the next video.